Renaissance Capital says it expects demand growth for the beer industry in Nigeria to be sluggish this year on the back of inflationary pressures and a lack of broad wage rate adjustments. Adedayo Ayeni, Vice President for Equity Research at Renaissance Capital, joins me via Skype from Cape Town to discuss growth expectations for the brewery space. Adedayo, thank you for taking the time out to join us today. You're not quite, according to your report, not quite bullish on the brewery sector in Nigeria this year. And according to the report, you say competition for market share is expected to erode value this year. Briefly help us understand what you mean by that.
Okay, thank you very much. For the brewers in 2019, what we've seen, or rather what we saw in 2018, was we saw increased competition, intensified especially by international breweries commissioning of his new plant. So what we do see in 2019 is we expect the major players to drop market share. We expect the likes of Nigerian Breweries and Guinness Nigeria to cede ground to international breweries. International Breweries currently is the only brewer that is growing in the double digits range, sort of, for Nigeria, while Nigerian Breweries is, for 2018, is expected to report a negative volume growth, roughly about 8 to 9% decline in volume. We also expect that at least from 2019, especially in the first half of the year, pricing will be the ability of brewers to increase prices will be very, very flat. You do have the impact of the new excise rate for beer coming in again in January. That was adjusted in June last year. And now in January this year, you see an increase of at least 16.7%. So on the back of that, we do expect that, not only do you have, demand side pressure, you also have cost side pressure as well, as the brewers begin to pay more as excise to the federal government.
Now, for international breweries, you say that this company has the ability to rapidly gain market share. However, you have concerns about the company's huge debt. Can you tell us about that?
Well, yeah, so as at 9 months 2018, international breweries had roughly debt of around $202 billion, which should translate to about $560 million. And that debt mostly was debt that was used in constructing the new plant at roughly about $90 billion. And then there was some debt that we also acquired following the merger with Pabod and Interfact. Now, we did not expect that debt to be quite significant, especially post-merger. We did not have a look into the debt books of the two brewers before the merger. But post the merger and the expansion of and the investment in the new plant in Shagamu, the size of the debt is a bit worrying, because what we are forecasting for international breweries for 2019 is EBITDA of roughly at around 20 billion. Now, if any of the bankers or any of the fund providers charge 10% on about 200 billion, which is sort of like an average rate that you'd see for some of these blue chips. If 10% on 200 billion, that is 20 billion. 20 billion immediately wipes out the EBITDA that we are forecasting for the business. Now, if you just layer on depreciation in there, now you see why we believe that international breweries will report another year of losses in 2019. We do have them reporting a net loss in 2018, and unless we see a material change in its capital structure, we see no major catalyst that will make international breweries report a positive profit number in 2019.
Okay, let's quickly move on to Nigeria Breweries. You were not particularly bullish on this one either. I mean, Nigeria Breweries, according to your report, has been the most impacted by the entry of SAB Miller into the Nigerian market. It's lost market share, and you're not too bullish on its revenue growth projections for 2019. I'll just elaborate more on that, especially on the revenue side.
Okay, on the revenue side, for Nigerian breweries, in my view, I think Nigerian Breweries was an easy target for international breweries upon entry in 2009 with Pabod, and then the major entry point for them was international breweries in 2011, 2012. Now, in the last 9 months in 2018, what we saw, the reported 9-month result, what we saw was Nigerian breweries dropping sales. It was a decline in sales. It was also a decline in volume as well, which should effectively mark a second consecutive year of volume decline for Nigerian breweries. Now, the reason why we say so is because Nigerian Breweries is the largest player in the market, with about 57% market share prior to 2018. And what it's effectively done, in my view, is that it's opened up a market for international breweries, especially in the value end of the market, which is where we call the affordable end of the market. So we think Nigerian Breweries is a fair target for them, given where international breweries aims to given the market position that they aim to go after in the beer market.
All right, Adedayo, thank you so much for sharing that with us. We appreciate your time today. Adedayo Ayeni, Vice President for Equity Research at Renaissance Capital.